So we are the last panel before you and the close of a very successful seminar, I guess. When Maram asked me to step in to moderate this panel, I said yes, and then I looked at the title. It said Transaction Banking 2050. I said, I'm not going to be around then, so guess I can say anything. And then I took a pause and said, let me look back. I mean, 2050 is 25 odd years from today. So I said, let's look back 25 years in the past, late 90s, and look at what, if someone had asked us what transaction banking would look in, say, 2025 or 2023, what would we have said? Lots has changed, right? I mean, we have smartphones. I think I had a brick which passed off for a cell phone those days. We do things quicker, things are electronic, things move faster, but there's lots that has not changed. And if I look at the big moments in the last 25 years, both positive and negative, I think there have been a lot of positive moves, but there have been things that have, and we discussed it at length over the last couple of days, 2001 and the Patriot Act changed the way we do correspondent banking, and we are still talking about it in conversations today. So I think it's a tough ask of anyone to project 25 years from today. But if anyone can do it, my esteemed colleagues on my panel could take a stab at it, right? So we have on this panel ready to talk about, take you to the future. I'll start with Valeria Sica from Citibank, who runs trade data, innovation,
and partnerships.
And partnerships. She has 20 years of trade experience, so she's going to bring a trade flavor to the future. Trade existed for centuries, so there's no reason to believe that trade won't exist for centuries going forward. Climate change might get us before trade goes away. We have David Scola, US CEO of Form 3, and he was previously at SWIFT, and his role is bringing the payment innovation of Form 3 to the US market, if I understand correctly.
Well said, yeah, thank you.
Yeah. And then closest to me is Chris Hill, who is the head of business development for the US at SWIFT. Yep. So we have some SWIFT experience on this panel. Yep. And Chris has over 25 years of experience in payment, cash management, and the liquidity space. I myself run transaction banking for BNP Paribas in the Americas. I too have a lot of experience across the globe, both in corporate banking and transaction banking. And I wore a tie to say that represent the old style banking, and we have people looking the innovative part of the fintech on the stage. So at least one can safely say that the dress code in 2050 will look very different.
Listen, can I be honest? I didn't think anybody was going to be here.
So the way we thought we would frame this conversation is around three questions. Where are we today? And we have heard a lot over the last couple of days, including the future of transaction banking from the Future Leaders panel, various people talking about current challenges and future challenges, a very scary conversation this morning on cybersecurity. And a very interesting panel talking about distributed ledger and the challenges of transforming trade going forward. So we are looking at this topic in three dimensions. I'd say we start with I'll start with you, David. Talk about what do you see as the challenges that the industry faces today from various fronts, and then get each of your perspective on the same.
So I think focusing on the payment side first, because that's what I know best these days, is I do think there is a concern around growing fractionalization of payment systems, right? I think there's this kind of existential threat around SWIFT potentially, right, where we've heard, whether there's a Chinese threat against, pulling out, or there's also this kind of existential threat against the US dollar as a reserve currency. We hear the BRIC countries putting together an alternative, which might not necessarily be a bad thing. But I think anything that leads to less harmonization and fractionalization of global payments is potentially dangerous, right? And I think the implications can be, the broader fractionalization of economies, which already exists, right? I think there's already multiple poles existing in global economies, and I think there's a difficulty. We heard yesterday how difficult it is to find financing and find US dollar clearing for African countries who are trying desperately to import foods that they so desperately need. So I do think that's a threat that we need to deal with, and I think organizations like BAFT and SWIFT play a critical role in ensuring that doesn't happen. I think there is also this growing concern around banks and deposits, right? And we heard yesterday, the economist I thought was great, talking about this kind of overhang of deposits versus assets that we have. That might be a temporary thing, but we could see that play out over time as well. And then I think there is also, from a technological perspective, the big banks have been able to invest very heavily in technology that even further differentiates their product offerings from the smaller banks. I think there is some democratization happening there with new technologies that are a bit more accessible, and I think companies that are coming to the fore that are offering more easier points of entry to do core banking or to do payment processing. Pitch Form 3 for a minute. But I think if that dynamic continues, where the big banks continue to aggregate more assets and have such a technological advantage over the smaller banks, that could be potentially a risk as well.
Great. And Valeria, how do you see it from a trade perspective?
So we heard a lot about it these days. We heard about fragmentation. We heard about not enough collaboration. We're all trying to solve for the same issues in the industry. I think that what's happening is that we're still thinking, at least for trade, we're still thinking this business the same way that we've been doing it over the past decades, hundreds of years. And I think that what's happening is that by trying to digitize the way we do it today, it's really difficult for us to move forward. So my thinking is, if we really want to change it and we want to get into the digital space, we also need to think how trade should be done if we were doing it today for the first time with the technology that we have. And that's something that we're working on, and that's why my team doesn't have any responsibility for the BAU. I even have a member in the team that came from Citi Ventures. So that was not even a possibility a few years ago, because we want to start thinking different so we can get moving forward.
I'm going to have a follow-up for you, because listening to what Sriram had to say in the previous panel, and looking at the failures of ventures that happened in the trade space, how do you solve for the problem of creating the network effect in trade? On the payment side, there is a network effect with a SWIFT kind of setup, because all banks are part of it. How do you see it in trade?
My thinking is rather than creating a solution and then trying to bring the network. We need to create solutions that work for the business, that work for our clients, that bring the value to the clients today. And then I think the network will come. When you create the network and then you try to bring the value, or you need to generate the value from the network, I think that we've seen it doesn't work. So in my mind, it's about creating solutions that really drive value, that work for the business, that the clients want to use, and the network will come after that.
Great. Over to you, Chris. What is your take on the same question, the challenges of today and how do you see today?
Well, my first reaction, similar to yours when we first started talking about this, as Suresh mentioned, was, oh my God, yeah, I'm not going to be here, the one driving this in 27 years or whatever. My second reaction was when it hit me that, oh my God, my kids are going to be the ones doing it, and I said, we're really in trouble. But then it dawned on me, they're the end driver, right? We can say our children, the next generation, millennials or whatever. That to me is what hits me as the driving force. What Dave started off with the digitization and interconnectivity and things like that, these are all for real. Obviously, they're happening, they're coming along, they're going to continue to go further. But it's the underlying consumer or the SME or the corporate that is always the driving force. So when we use these terms like instant, frictionless, faster, better, et cetera, that's really being driven by them and their needs. And I see that, right? I see that in people who work for me. I see it in joking aside, my own kids and so forth. We joked, inevitably in a discussion like this, checks is gonna come up, even if it's in a joking matter. But in my opinion, the way checks goes away is when the people behind us stop writing them. And that's happening, right? So that's, again, one of those driving forces. So, that was kind of the overriding thing for me. It's really that end user experience, the faster, the frictionless, and really the ease of use at the end of the line. All sorts of instant payment schemes are happening. Obviously, a lot of other countries have it. In the US over the past few years, we've now moved to it in the case of real-time payments, same-day ACH. We're about to see FedNow happen. So these things are just going to quicken that pace and make things more efficient. But it also throws us into the realm of 24/7 processing and things and what goes on with that. That's a liquidity challenge, right? When you start to think about all the banks normally are providing intraday liquidity. Well, what is intraday liquidity when you're up 24/7? Is it really still a thing or not, and what does that lead to? So there's all these dynamics that kind of go along with everything we're doing. Obviously, as I look back the last few years, here's my plug for SWIFT this time, right, we've been dominated by getting ready for ISO 20022, of course. And what that brings to the community is the term we use, and you guys are that community. And obviously it does bring the enhanced data. So we're live now, the enhanced data is coming in, it's only gonna, we're gonna see more and more of it, and it's gonna get better. And now it's a matter of those use cases. How do we embed those use cases to make sure there's a real benefit? Whether it's on the cost saving side, we just heard on the, I think Merlin was the one that mentioned that, or on the revenue opportunity and generation side. In my opinion, the data is the new revenue opportunity. So.
Excellent. Now maybe in our journey to 2050, we'll try to take our first pause at 2030. Okay. So how do you see I'll start with you, Chris, this time.
Sure.
How do you see the near term? I'd say 2030 is near term enough if you're looking at 2050.
Yeah.
How do you see the near term, and what are the drivers that will impact the near term? Is it ESG and net zero? Is it technology? Is it regulation? Is it geopolitics? What's your take?
Yeah, well, not to state the obvious, but I think it's pretty much all of that, right, as we look forward. I commented already in my previous statement, I see the technology, the digitization obviously continuing. For us, and here I am speaking at the last session, but if we think about the kickoff with Chris from Visa, he commented on this too, and that is, you've got all sorts of different players. You've got the banks themselves, not only doing their normal day-to-day banking business, but we heard from Umar about things like Onyx and Confirm, and they have their Expedite product. These are their own proprietary products, right, that they're pushing, and other banks are doing the same. There's the card providers and Visa and MasterCard, et cetera, and what they're doing. I think Chris might have used the term network of networks. We do the same, of course, right? That's where we envision ourselves playing, is being able to provide that interconnectivity, that interoperability, whether it's between networks or if it's things like within a particular country or currency, when you think about regular fiat currencies versus CBDCs, the linking of CBDCs. These are the kind of the trends that we foresee continuing, of course, not only in the next 7 years, looking to 2030, but obviously beyond that towards 50 as well. The data piece is, I just mentioned it, so sorry to be a little bit repetitive, but I only see that getting enhanced. You know, the immediate use cases we're going to be looking at and focused on in the next, you know, kind of few months or over the next 3 years as this coexistence period with ISO happens and ideally comes to an end where it's just everybody on it, but that'll continue as well, definitely. I mean, the other thing is, you asked about geopolitics and ESG. I mean, something's going to happen geopolitical-wise. I don't have that crystal ball, of course, but there's, you know, past history tells us something else will happen, and we're going to have to react to that, and that'll be a driving force. There's obviously just simply growth in Asia. That's a definite, right? It's happening. You don't need the crystal ball for that, so that's going to be driving certain forces. For me, on the ESG side of things, I think it's kind of similar to my comments about when I was half joking about the next generation eliminating checks because they're just simply not going to do it. I think the next generation is going to insist on those ESG initiatives, whether it's the social piece, the governance piece, environmental piece, et cetera. At SWIFT, we actually talk about breaking out E versus S versus G, and what's the real force, rather than just talking about it. What are the, again, use cases, to use that term, that are really going to drive that forward? We see that as a big trend. So.
Now we'll move from you to Valeria again.
Sure.
What's your take?
For 2030, so my thinking is we're going to see more, a bigger play, I think, of fintechs and also big tech, because in the recent years we focus a lot on fintechs, and I think we now are shifting a little bit to also involve the big techs with all the new technologies out there and the cloud play. So I think that will have a bigger play for 2030. I also think what we're seeing is there's a lot of collaboration between public and private sector, and I think that's going to continue, and that's going to be very positive for the industry, because there was a time where the public sector would say, oh, no, that's a private issue, the banks need to solve it. And now we're seeing a lot more willingness to have the conversation and see how we can work together to solve on all these issues. So I think that's where we're going, and the geopolitical environment, I think, is going to be critical to define what happens in the next 7 years.
Great. And David, how do you see it?
Yeah, I mean, I think similar to some of the themes Valeria touched on, I won't attempt to cover everything, but I think just I think technology and the speed of change will be a driving factor from now until 2030, certainly. I think we're seeing, every bank I talk to is going through some form of payments modernization program, or, just modernizing their back office in general. And I think we're at kind of an inflection point where the old systems that were kind of monolithic and mainframe and are being torn down, and banks are looking to kind of future-proof themselves for the next iteration. And that is clearly going to be driven by heavy usage of cloud, I think heavy usage of APIs to integrate various microservices that will be provided by a range of vendors, whether it's big tech or fintech or small tech. But I think you're going to start to see banks look to try and pick, I hate the term, but best of breed technologies in each of the spaces they're trying to solve for, and they want the flexibility to do that. I think AI will factor into that to some extent. I think we're already seeing it as probably the best use case, at least from my perspective, is in terms of fraud detection and monitoring, right? We're using AI already to try and see across banks, right? So rather than within a single bank's payment activity, across the multiple banks that we serve, applying AI models to that to see if we can detect similar fraud vectors across multiple banks. So I think that the use and adoption of AI, unless it takes over the world and kills us all, I think will start to proliferate across, you know, how we process not payments and trade and securities businesses.
Are you all strapped in, ready to take off to 2050 now?
I guess so.
Sure.
I mean, we can say anything, right? 2050,
So what I'd like to do, starting with you, Valeria, this time, is what's your one-sentence prediction for 2050? Where do you see the industry? Where do you see banks? Where do you see, and each of you have the same task of projecting.
We're guessing, right? And this is my own personal opinion. So what I think is that eventually banks will go back to their core function, that is to provide liquidity and manage risk, and technology will solve for everything else. That's what I'm thinking.
So I did ask ChatGPT, and it gave me a very long answer, but I won't bore you with it. But I think banking and banking services will start to fade into the background a little bit. I mean, banks are still going to be an essential component of the economy, but I think more and more we're seeing things just start to, the payment services and you know, all of the services that banks provide start to become more and more embedded into the background of how we live our lives. I think Matt Lewis the other day said, I want to be able to just order a coffee and just think about ordering coffee and the payment happens, right? I think it's probably not too divergent from that, right? It will just become part of our lives, and it'll be less obvious and require less effort, frankly.
And you, Chris?
Well, so Matt Lewis and I used to work together at Swift before he went to Wells, and the thought I had when he said that was, well, he's going to think that, but without the goatee, I look just like him, and I'm going to get the coffee, you know?
Yes,
so
entirely
it could happen. So who knows, right? I mean, but absolutely, I think the whole convenience factor again. I mean, we have smart refrigerators now, and that's just going to continue where, you know, the milk is empty and it reorders the milk for you. Or if it's biometrics, you know, we're already, I forget if it was Matt or somebody else mentioned facial recognition. We're all using thumbprints for things. I think that just kind of continues forward. For me, the overriding thing, I think, though, is the combination of the technology and the data and what that'll bring. I really, by 2050, I think we're going to be able to be much more predictive and much more proactive with things. So if you think about KYC and AML or any sort of regulatory aspect, I feel like that data and that technology by then will allow the banks or us as individuals to be more predictive, not only payment trends and so forth, but to a point where, I know this may sound crazy, but we turn around to the government and we start recommending how to handle regulations or, you know, what we're seeing as banks and other service providers, rather than be reactive to their regulations. And there's always that gray area, how do you interpret it? I think that'll enable us. I'm going to be a little positive here, and I think that'll enable us to actually be more proactive on that front.
Great. I'm going to leave you as well with my thought on this before we head to some of the questions. My take is the industry will be very different, not for all the reasons you say, technology, consumer demand, the way we operate. But if the industry and governments don't solve for the fundamental issues or help solve for the fundamental issues facing the world, whether it is the empathy factor that came up yesterday, whether it is the sustainability factor, or whether it is inequality and wealth distribution, the form the industry exists in 2050 may be completely different. It may well be dystopian if there isn't a massive transformation in how we think about financial services. So I'd like to leave the audience with this thought on what kind of transformation. We are all commercial organizations with commercial goals and objectives, working in a society where we play a very relevant and significant part in lives and futures of people. So how can this industry work with all the actors that form the world in being that transformation? So I'm going to go from there to some questions. So let me see whether my eyesight will enable me to read those questions. If any one of you can see them clearly.
The first one's the first one's about non-operational deposits and impacting competition for operational deposits. I mean, I think that's a really tricky one, right? Because I think we've seen with some of the recent bank failures, the outflow modeling around deposits has proven to be incorrect, right? And I think it does lead to a bigger question around, well, you know, how can banks rely on those deposits, right, on the one side of the balance sheet and still be able to provide loans and funding on the other side of the balance sheet if they can't accurately model out the deposit outflow. So I think there will be more questions around, and I see Tarek's favorite question around intraday liquidity on the screen as well, right? I think there will be competition for intraday liquidity because the value of that funding will increase as, you know, people become less able to you know, or less willing to hold deposits that they can't necessarily rely on.
And you're totally right, because Tariq is, as usual, right. Because if you look at bank failures over the last 2 decades, it's never been creditworthiness, it's been liquidity.
Yeah.
Right? So at the end of the day, liquidity is key.
It might become digital liquidity and tokens and other kind of liquidity from how we know it today, but it's going to be there.
Yeah. We also experienced the other kind of liquidity at the bar, but that's a different
That's right.
Well, there were a few questions there on liquidity. There's the one about, is it the new oil and so forth too. So just maybe to comment on this, this kind of, for me, brings it back to my comment about the data and the technology, right? Because you know, treasurers, whether it's in a bank or a corporation or whatever, are going to have that fast and definitive access to the data that allows them to determine where do they need the liquidity, you know, across entities, across geography and currencies, et cetera. You're absolutely right, Suresh. I mean, not to single out names, but obviously this is what affected, you know, Bear and Lehman, you know, 12, 13 years ago, and is now affecting Silicon Valley Bank and some of the others. So, so that just keeps bringing me back to, you know, access to the data, you know, and also the speed of having that data in order to be able to make those decisions. That doesn't solve the concentration risk issue, because that was obviously the other big factor with some of these failures. So,
then maybe I'll take the next one. Do banks have the right talent pipeline to lead into 2050? I tend to believe that, I mean, the talent pipeline that's leading in 2050 is perhaps among our future leaders, perhaps not yet joined the industry today, right? So at banks as a place of work have become less fashionable than it was maybe a decade ago. But the industry is solving for that by paying relatively generously. But I think we'll have to I think it comes back to my earlier comment. We have to be relevant to society, because the next gen is not going to work for banks if we are in a different place.
Not to be controversial, but I think they will not work in the banks the way we know it today. So it needs to evolve, and they will force us in a way to evolve and make it different. And if we think about the first question on what is the impact of the new technologies like AI on the size, maybe reduction of workforce in transaction banking in 2050, my first reaction to that is we've seen technology introduced in our operations forever, and that didn't mean a dramatic reduction of our workforce. If anything, what triggers is a redeployment or new things that we need to do, because technology is not solving for everything. So it may have an impact, but I think it will also drive different roles and different expertise.
And I think we don't also need to beat ourselves up too much, because if you look at if I go back to that same 25 years back, and I look at developments in trade, the whole access of financing to, okay, today we are talking deep tier and going further, but the whole supply chain world has changed access to liquidity and working capital across the spectrum. And that's the fastest growing segment of the industry. So product innovation has happened and will continue to happen with partnerships with others, but it has happened.
Right, so we've seen it, for example, 20 years ago, we had the process in the countries, and then we moved it to the central processing centers. That made the people in the countries to become more customer service. It's not that we closed the countries because we moved the process somewhere else. Or then we introduced OCR. We needed people to review what the OCR engine was doing. So the nature of the job may change, but it's not going to eliminate it completely.
So I think we have time for a couple more questions. Which one will we take? Valeria, there is one for you.
Which one?
The number 4.
Valeria talked about Citi. Oh, yeah. Citi visiting, joining her team, busy funds like Citi and Standard & Western fintechs. Do you think this is a great opportunity for other banks? I think so. And what we are doing really is also there was a mindset shift in how we are doing our investments and that's why now we have the expertise in the business. Because the way we were doing it was, okay, we look at a company, they were looking at companies and thinking about the potential and the ROI, but just by the performance of the company itself. Now we're bringing that into the business, so we really work it together and it becomes a win-win for the fintech and for us in the business. So the idea is that we start working together because in our experience, we made some investments, but we never really got into developing that company, and we want to change that so it really grows with us as our business grows.
Yeah, maybe just from the other side of that equation. So we are, as a tech company, if you look at our cap table, it's interesting, right? Because it's Barclays, it's MasterCard, it's Goldman Sachs. So it is kind of the banks, I think, coming together, and we see this with other companies around the industry where they want to solve for a specific problem, and rather than each of the banks kind of do that themselves, they're investing in participants who can create the solution for not only for them, but for the industry more broadly. So I think we will see more and more of that happening.
There's a question on do pension funds, insurance companies, venture capital continue to buy trade paper, banks struggling to keep portfolio. I don't think it's, yes, there are more sorts of investors into the trade asset class, and I actually think it's a very good thing because the need for, if you look at the need for financing of suppliers and the supply chain and the industry from a trade perspective, the unfulfilled gap is massive. So having pockets of capital coming from outside the banking segment with the pressures on liquidity of the banking system we talked about is not a bad thing. Obviously, the guardrails need to be there and how the paper is distributed, and what you don't want is people who don't understand the asset class coming in and then creating dislocation. But otherwise, it makes a lot of sense and will enhance the value proposition to the industry and the client base. So 1 minute, one last question. Who wants to take it?
I noticed the faster, cheaper, and how will the industry manage profitability and fraud management? I mean, I know I was one of the ones throwing out those terms like instant, frictionless, et cetera. I mean, again, that is consumer and underlying client demand, but at the same time, everything we do has to be with that safety, security, and resiliency in mind, first and foremost, not just in mind, first and foremost. And I think that's why you see some of the data, the feedback we saw in some of those surveys, especially, you know, when you see the consumer wants these things, but obviously the safety and security is right at the top of the list. So we can't be slack on that, is my point. Obviously, it's a big deal for us. I mean, you know, this year, or I should say last year, especially when we were going through the whole start of the Russia-Ukraine situation, that was top of mind, of course. But can't slack on that while you're providing the new innovative services, I guess, is what I would say.
For less money.
Yeah,
Same time.
for less money.
That's the challenge, right?
3, 2, 1, and it's
Well
time.
done, Suresh.
So thank you all, folks, for listening to us patiently.
Thank you.
Thank you.